Welcome to DealTalk. I'm Michael Marzek, and on today's show, I'm sitting down with John LeMay, a partner at Blue Point Capital, to talk about the PE firm's acquisition of Water Lilies, a 27-year-old private label manufacturer of premium frozen Asian-inspired food sold at retail and to the food service industry. John, welcome to DealTalk.
Thanks, glad to be here.
So before we jump into the deal, give us a little background on Blue Point, what size of deals it does, what sectors it likes to target, and how much capital you're working with.
Sure. We've been together since 2000. We focus on deals in the lower middle market, sort of 7 to 30 million of EBITDA in consumer, business services, manufacturing, and distribution. Our latest fund was our Fund 4, which is a $730 million fund.
Great. So let's talk about the deal. At the end of August, you announced that Blue Point had acquired Water Lilies. That's a second-generation family member, and CEO Peter Lee was going to retain a significant portion of the ownership of the company. How did you come across the business?
Yeah, so we maintain a pretty active dialogue with the investment banks that are most active in the food and beverage market. One of those is Harris Williams, and so Harris Williams kind of knew of our criteria in the space and was able to bring us the deal for a review.
So what did you see in Water Lilies in particular that wanted you to look at acquiring it?
Yeah, we liked the product and market mix and their path to market. So specifically, we liked the fact they were an ethnic food, which is seeing higher growth rates, snacking, sort of a better for you, cleaner label profile, and then with a heavy focus on private label in the frozen space, which we think is a nice growth area. The management team led by Peter Lee was very, very impressive. So that drew us into the deal as well. And then we're very fortunate. We have two operating partners, Clarence Moe and Angelo Fregas, who we've known for over 15 years. And they have directly relevant experience in this space. Clarence's family business was called Discovery Foods and was a frozen Asian appetizer business. And Angelo had worked with him in that business. So they had very specific views on the industry, knowledge of the equipment, and path to market. So we were able to get really comfortable with the asset quickly and with a value add plan that made sense.
So how long did it take for the deal to come together?
Yeah, so it's interesting, and this is, I guess, becoming more common in the market. But given our interest in the company and the insight provided by our operating partners and the fact that it fit a lot of our criteria very nicely, we took an aggressive posture on the deal. After our first interaction with management, we kicked off all phases of our diligence effort, and we're able to come to the LOI date, with a fully underwritten deal. And we're able to close 12 days after signing the letter of intent. And again, this is really built on this being a perfect fit for our food and beverage practice, and then the increased comfort that came with our operating partners.
Any unique aspects of the deal other than how quick it came together?
No, I don't think so. And we were, in terms of the structure, we were pleased that the management team made a substantive investment alongside us in the deal. But no, other than that, I think it was pretty straightforward.
So before we talk about where you're going to go with the business, tell us a little bit more about the food and beverage practice that you have, some of the other types of companies that you've invested in, and why you like this sector so much.
Sure. So all the criteria I mentioned earlier on Water Lilies are central to our investing in food and beverage. So again, better for you, cleaner label profile, private label, ethnic food, snacking are all right on the top of our list in terms of things we look for in food deals. Another deal we have in our portfolio today is Country Pure Foods. A big part of investing in that business was an opportunity to dive into the private label plant-based beverage market. So they're growing very rapidly, serving retailers with almond milk and oat milk. So that's another example of nice tailwinds in the private label sector.
You have this track record. You mentioned a couple of the operating partners that you're going to bring into the deal. What's the plan moving forward here for Water Lilies?
Sure. So we dig in very hard in building a value add plan before we close, and had a detailed conversation with management as to whether there was alignment there. Again, the themes here, really nice tailwinds that we can leverage for organic growth. A real opportunity, we think, to take private label penetration within this category up from probably 10 to 15% to much higher level, more aligned with other segments in private label. We also saw an opportunity just to build significant physical capacity Clarence Moe has a lot of experience with supporting build-outs of facilities, which is something we did in our prior investment called Perimeter Foods. So supporting management and adding a dramatic level of capacity. And then lastly, really expanding their competence in consumer research and consumer understanding so that we can establish a position as a real authority for retailers as sort of a category manager within this category.
So, for our CEOs listening out there, how does this sort of interaction, take place with the management team that's staying in place? I mean, how do they work, alongside the people that Blue Point's bringing in?
Yeah, so a few things there. One, again, in terms of creating this value creation plan, we laid that out and had meetings pre-closing with management to say, here's kind of where we think this business can go, and to make sure that there's really strong alignment with the team. If there isn't, we just don't pursue deals aggressively. We don't want to wait till post-closing to discover that there's some disconnect in how we want to build the asset. The other thing we're very clear on is our operating partners are not looking to take a management position in this case. Angelo and Clarence are there to provide guidance, resources, mentoring, but are not there to step in and day-to-day management. So wanted to create real comfort on the part of the management team that they're still running the show, which is how we operate. But we'll have really interesting and constructive resources to support them.
So tell me a little about the consumer research component of it. That's pretty interesting to me.
Yeah, so we spent a good example would be the work we did at Perimeter Brands, which was a fresh salsa business that we exited about a year ago. So in that segment, trying to understand what it is consumers were looking for in that product, understanding formulation, packaging, all the things that bring you to a point where you're a clearly differentiated product. And so that's doing focus groups, having them taste the product, react to packaging, and really give feedback as to what it is that's really working with your product and what areas maybe you could change or improve. So we plan to do that. Again, even though it's private label, we want to bring forth the best insight we can on how consumers view the category so we can bring that to our retailers and help them in constructing their private label program.
What can you tell us about your overall sort of long-range expectations for the business, either in terms of market share or revenue growth?
Yeah, so it's been growing very, very nicely within the segment. It is a leader, we think, in that private label element of the business. We think that category is going to grow rapidly, and we're going to grow rapidly with it. So we're very confident in our ability to really be a standout. There are two large strategic players in the segment, and then a pretty long tail of smaller regional players. And we think we can be really the dominant position within the private label sector.
And this would be the kind of thing where you would just hold this one business and work in development. You wouldn't be necessarily looking for any other businesses to add in with it.
No, M&A is not the center of this focus because we think there's a really terrific organic growth story here. Mm-hmm. That said, we very much will be open to looking at acquisitions that could bring sort of new products, but we do want to stay within the ethnic snacking, better for you, cleaner label, premium category. So if we find something that sort of would augment that, maybe provide some geographic diversification. We're operating out of the East Coast now, and being on the West Coast could help. We certainly did that with our fresh salsa business, where we bought a business in California to complement what we had in Florida. So we will keep an eye on that. It won't be the focus of the deal, but we'll look for opportunities nonetheless.
So we did a episode a while back with a couple of folks from Prairie Capital on the food and beverage sector and how strong M&A has been for it this year, despite some of the slowdowns. What are you seeing in the sector overall right now?
Yeah, I think it's been pretty healthy. I think it's a category that in most of its subsegments will perform well if the economy hits a soft spot. I think a lot of companies now are coming out of a period where you can kind of see past the COVID bump or COVID downdraft that the company might have experienced. So that's making it a little bit easier to underwrite current earnings. So I think it's a sector that traditionally has done well through cycles. And so interest sort of rises often when you're facing a more uneven economic environment.
Let me circle back to the deal. You said you came in with a pretty aggressive offer. I mean, was there a lot of competition for the business?
I mean, certainly Harris Williams showed it to the market. I won't say exactly how many, but they narrowed the process relatively quickly to parties that had a real angle and story experience in food and bev. And we were fortunate to be amongst that group. And we maintain active dialogue with them. They do a great job at running their processes. So it was fortunate, in fact, that the company and they were so well prepared, they could facilitate a fast-moving process like the one we wanted to pursue.
So just 12 days to close a record for you guys, or have you
It
actually
is.
done them quicker?
That would be about the fastest. A lot of things came together to make that work.
Yeah, well, congratulations on that. That's
Thank
really
you.
impressive. So what do you see, from here on out the rest of the year for Blue Point in terms of deal activity and maybe making some more acquisitions?
Yeah, so we closed a couple of platforms in the last month or so, and activity level has really picked up pretty meaningfully. It was off a bit the first half of the year for sure for us. Well, last year was extraordinary. We think Q4 won't be as robust as last year. Last year was an extremely busy period in the fourth quarter, but we are seeing things pick up a bit and have a really good pipeline right now. So we're hoping to perhaps get to one more platform before year end, but see pretty good momentum.
So let me ask you this, getting back to Water Lilies again, thinking about, we like to focus our content towards our CEO audience. What was it about that business, the way they were prepared, the way they ran that business that not only made you want to come in with an aggressive offer, but were able to close quickly? I mean, that any seller wants to hear those words. So what were the aspects about that business that allowed that to happen?
Yeah, so I mean, not to hit the same points, but in part it was a comfort with the segment and the assets and the strategy based on our operating partner experience. But what I'd also say is that the management team and Harris Williams were very well prepared. So we ran in really hard, right, with questions and looking for big data sets, and largely they were able to provide those. And they were very credible in talking about why the growth they'd experienced would continue. Very specific discussions around customers that were likely to come on board, how they might expand capacity. So sometimes you get in a process like this and the growth plans are very aggressive, but not very well supported. They were, we thought, very well supported here, so that helped quite a lot.
That's great. Yeah, that's exactly the kind of insight we're looking for people to understand the process and what it takes to be able to not only just do a deal, but to do a deal efficiently.
Sure.
Well, John, I've enjoyed learning more about Blue Point's deal, and I'd like to wish you and Water Lilies continued success as you roll out the growth strategy.
Thanks very much. Enjoyed the conversation.
Great. Thanks for being with us.
All right. Take care.